Good evening, ladies and gentlemen. I hope you are all well. I'm going to try and keep this video as short as possible just to help you understand the nature of repetition in the marketplace. I'll tell you why the markets repeat themselves, because human nature doesn't change. You change human behavior, then you're going to get a different market. People will always be fearful and people will always be greedy. These are the two indicators that the markets use. Okay? We know Mr. Market Maker is the guy who supplies the liquidity so that when you go long, he's preparing to go short. And likewise, when you go short, he's preparing to go long. I'm going to be pulling up a few structures in the chart just to help you understand what to look for when you come to the same scenario and the potential for it to happen again. Now, this is geared toward the day traders, but you can also see this playing out on higher time frames as well. It just may take a little bit longer. So let's dive into it, ladies and gentlemen. Let's just look at this week's price action with Bitcoin. You can see throughout this week, ladies and gentlemen, that the psychological high and low had been established. And the psychological high and the psychological low takes the first high and the first low that is formed at the start of a trading week. This, in principle, is the range that the market maker is playing his spread from, and wherever he decides to move towards is going to dictate the nature of what to expect from Bitcoin throughout the rest of the week. In other words, you may have seen at the start of the week they move away from the psychological high, and then coming in towards the end of the week, they make their way back into that psychological range. Okay? Usually they move away aggressively from the psychological low, and then you can count that on Thursday they're going to try and come back up towards the psychological low yet again. Okay? Now, with that in your mind, ladies and gentlemen, looking at the way Bitcoin has moved this week, it's going to help you understand what to be aware of when we come into the next week of Bitcoin's behavior. The first thing that you want to be aware of is, how does price behave on the Sunday, Monday? That's what you're looking for. If at the start of the week they move away aggressively from one point, okay, then you're going to have an understanding that if they maintain that movement, there's a good chance that they may be working back towards that, but it all depends on what zones they decide to take on. For example, just look at how Bitcoin started off this week. They moved away from the psychological high, but they found resistance at the 200 EMA, which is right here. Now, this is on the 1 hour time frame. They came back down into the range, and then they came back up again above the psychological high. And they kept on doing this behavior throughout the week. And then come Thursday, Friday, they decided to actually reject the psychological range, psychological high, and then move back down again. Now, what I want you to focus on here, guys, is this. The phenomena of the whole numbers and the half numbers. Specifically, look at the 30,000 and the 30,500. Now, the market maker likes to build his shorts above key notable areas. So if this is an area, okay, just look at this. Say you have price, and this is hypothetically the 30K range, all right? Market maker is going to move price above into that range, and he's going to be consolidating like this, giving traders the belief that it could go higher. But he keeps price in this range, spikes lower, comes back up again. And then what he does is he waits for the right time where he believes that he's committed enough traders on the belief that it can go higher, and that this zone right here is acting as a support. He will then move price away from the point. Traders are committed to the upside, and then bang, he rips it back into the range. That same behavior happened right here, ladies and gentlemen. He was working the 30,000 range and moved his positions up. He induced traders to believe that price was going to continue higher. But if we were aware of the video that I did on Thursday, we would have had the understanding that the market maker was finding, not the market maker, but retail traders were seeing that price was coming up towards the 800 EMA. Now, we know the 800 EMA on the 15-minute time frame is the 200 EMA on the 1 hour time frame. And the behavior of Bitcoin over these past few weeks has found resistance at the 200 EMA. So if I just bring that chart up right now, you can see, look, 200 EMAs here. Resistance, resistance, go back into the 200 EMA. Resistance, 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 resistance. It seems to be respecting that 200 EMA, all right? However, the difference between now and the 200 EMA back then, okay, was price kept on going above that, and it was finding more resistance at the 800. Now, the problem that we've got is it's now seeing more resistance at the 200 EMA, yet we have got this area right here, which I will go into very shortly. What I'm trying to get you to understand is this, guys. You always got to ask yourself, if the market maker is working a point in the chart and not following through with it, he's likely to be preparing for something else. Notice the green and the blue vector candles that are appearing in and around the psychological high, on top of the confluence of the psychological high and the 200 EMA. You see, on Thursday, we saw that the 200 EMA on the 15-minute time frame was sat right here at the psychological low. And we did say on Thursday that this was a strong confluence for price to move up. Now, this was on Thursday. And of course, Thursday is a midweek reversal point. So they respected that narrative and price reverses back up and hits these zones. When you dive into the actual structure of what had happened on Thursday coming into Friday, the concept of 3 hits to the high, they hit the zone once, they hit it twice, and then they hit it one more time. The presence of stopping volume candles was available for us to understand that they may be seeking a point to the downside. Now, this wouldn't have been a surprise to you, ladies and gentlemen, because on the same video that we discussed this M formation on here was the same video that we had addressed the zones in the chart that they were able to come back into. So check this chart out. This was done on the Thursday, where we're talking about the idea that if they were going to go higher, they would need to show a support at this point in the chart. But that wasn't the case. You can see that they had then worked price all the way back down into the green vector candle ranges. That was a bit of a problem for us. More importantly, this chart is actually Ethereum. But we know Ethereum follows Bitcoin, because I can now bring up Bitcoin, or should I say Ethereum, and you'll be able to see that Ethereum has actually come back and recovered most of those points in the chart. Yeah, you can see that. They hit that point and they were just off on that zone, and they come back and recovered that green vector point, and they just left this little zone right here. Nice little boomer moment there for you, ladies and gentlemen. But what I'm trying to say to you guys is to help you understand that when you do see this behavior right here, be aware of how the candlesticks are behaving. How can you have such an aggressive push up yet you don't go nowhere? How is it that they are moving above the key 30,500 zone if Mr. Market Maker is trying to build his shorts at the highest possible point without enabling the retail traders to hit the charts? And that would mean he would have an influx of orders that he would be obligated to fulfill to continue with the smooth transition of buying and selling in the marketplace. You see, that's the market maker's obligation to the market. He has to make sure that there is a buyer and a seller. He has to make sure that the liquidity is present for the buyer and for the seller. And he's the guy who's going to provide the order opposite to the buyer and to the seller. In other words, when you go long, he goes short. When you go short, he goes long. That's how the market moves. Now, a lot of people will challenge the idea about the market maker. Quite frankly, it's in the context itself. Just go into Binance, go into Bybit, go into any exchange out there. They're going to tell you about the liquidity providers, okay? FTX, Binance, Bybit, they are an exchange, and they profit on your contribution to you coming to the chart and putting in orders. That's all they are about. Orders, orders. Whatever they negotiate with the market maker in terms of what happens when people get liquidated is up to them. Whatever they discuss is what they discuss. All right? But ultimately, you are using Binance as a means to get access to the liquidity to match your order, because not everyone trades with the same amount of money. What if you get a few thousand people in Binance that are trading $1 million accounts? That would mean that if there was no market maker, Binance would have to supply that liquidity to those traders. So then Binance, when those traders win, is losing money. So the best way for Binance to protect itself is to enable a liquidity provider who will then be in a position to make the market. You see, the market maker doesn't lose money. He does take on risk. But it's when you see these sort of instances in the chart, ladies and gentlemen, where he works the zones in such a particular way that if he were to release the liquidity to the upside and continue price higher because he wants to build more shorts, the retail trader will get to a point where he will then look to start closing his position, and then the market maker would then still need to keep moving price higher to encourage more traders to step in, which would mean that those traders will then think and be a little bit more cautious about trading and start taking quick profits because they would believe that Bitcoin has traveled too far to the upside. So Mr. Market Maker is already at a loss now. Even though he knows where he can send price and he is in control of it, he has to be careful about the amount of liquidity that he allows into certain zones in the chart based on the orders that he puts alongside the retail trader. Remember, when he moves price up, he's going short. When you see wicks to the upside, ladies and gentlemen, that's the market maker just grabbing the last bits of liquidity before he starts to release. Okay? When people see this sort of structure here, some people might think that this is a bullish flag. They're getting ready for a move higher. But then what happens? They spike the high, trigger the orders, and then they whip down to the downside again. Look left, you see the green vector candles. They take every single point in the chart. Now, looking at Bitcoin right now, you're probably wondering, well, what's the story? Well, look at it like this. You can see that we've got the red vector candle in the range. So here is an example. You can see that the market makers had flushed price to the downside. Now, whenever you see these violet vector candles appearing at the lowest point in the chart, it's an indication, based on the principle of the hybrid, that these vector candles right here indicate that volume is starting to rise. At the same time, it can also imply that it's not as strong as it needs to be if it's trying to force price down lower. You see, this movement here was designed to move price out of the range to come back and absorb the liquidity in this area here. With this behavior right here was the market maker's last attempt at being able to build some more longs at lower prices on the fear of the retail trader believing that price was going to continue down lower. Now, earlier on, I shared to the patrons of the channel the idea that with regards to price action right here, that we would likely see Bitcoin come back up into this range. Now, this is the weekend, so be aware of that. The weekend is a little bit tricky, but mostly a lot of volatility does happen on the weekend. And if you are not proficient in the hybrid system, stay away from trading at the weekends, okay? Because you're just going to give back all that you have made throughout the week. It's a crazy time. Once you become proficient in the hybrid system or any system, you'll know when to start trading at the weekends, and you'll be very, very cautious with your trading. Now, looking at what we spoke about earlier on, ladies and gentlemen, in this video to the market maker tier in the Patreon, I was discussing with them the idea that this move to the downside may be slowing down, and we are likely to see Bitcoin try and move back up into the range. Now, we didn't get the full range, ladies and gentlemen, because this is where we are right now with Bitcoin. We have come back up into that point, okay? Now, the move that happened from last night, just as the final session of, towards the end of New York session on Friday, I had managed to exploit an interesting long trade in Bitcoin, okay? And this is what I will show in the Patreons. And I was talking about building positions potentially at the lowest point at that day in time. So it was down here, okay? And what I was doing, I was explaining how I was understanding price action when price was making its way to the lows. Now, this is on this 1 minute time frame, and I do work a lot off the 1 minute time frame when I'm building positions, because I'm trying to understand the development of them trying to come away from a range. You see, it's fractal, ladies and gentlemen. They have to build the position, okay? And they have to develop it in such a way as to not freak the market out. Because Bitcoin can't just come down and then shoot back up again, although they do that. But that continuous behavior is going to scare traders off, and they will not trade the markets. Remember, the markets are a place for the market maker to advertise the ability to be able to make money from the fluctuations in price. That's all it is. It's a cash machine for those guys, okay? Now, I talked into this and started diving into my understanding and why I was placing longs in this area. See, I place longs when price drops. I don't buy or sell at discount ranges, okay? I sell at premium. This is where I sold. This is where I brought, okay? And this is what I'm talking about. When you're buying and selling in the market, do not sell at the lows, because economically speaking, it wouldn't make sense for you to buy something of value to only sell it at a lower price, okay? Take the theory of it. You buy something of value with the idea to sell it later on for more. What do? You sell it at a premium. You don't sell it at a discount. All right? Now, coming into the weekend, guys, Bitcoin has made its way back into the psychological ranges themselves. We are going to have some new psychological ranges printed tonight, so be aware of it. Okay? Go on your chart tonight, guys, and mark off these zones. Mark off the 29,483 and mark off the 30,348. Put those levels on your chart. And then with the Traders Reality Indicator, if you haven't downloaded it already, you can then wait for the update for the psychological levels on TradingView, which will be roughly about 11 o'clock tonight, Saturday evening, which is UK time, 11 p.m. So in the next 3 hours time. All right. That's what you really want to be focusing on. And once those levels are formed, okay, pay attention to how they behave. Keep these two numbers in line on your charts because there's a reason as to why they have contained price in this zone. Because if we actually zoom out on the chart, ladies and gentlemen, we're going to see that Bitcoin effectively is in a very interesting structure on the 1 hour time frame. Check this out. You can see that it's forming a lovely pattern right here. Now, the problem that I've got, and I have addressed it already, is this green vector candle zone down here. Okay, I would prefer if Bitcoin came down to this point to get this out of the way so that we can then see some volatile movement to move away from it. Of course, if that doesn't happen, ladies and gentlemen, and these two hits right here sustain themselves, okay, then happy days. We could be in line to coming back up into this point right here, this zone right here, and then start working previous structures in the chart where Mr. Market Maker is able to induce traders to step in, but more importantly, start coming back up towards these vector candles that Mr. Market Maker has left his presence in the charts, which will take us to the 33 zone, and then, of course, all the way up here around the 38 area. Now, before any of that can happen, ladies and gentlemen, we must know that the S&P needs to hold precedence. If you remember, a few days ago, I did a video talking about my April 30th projection, which I gave to the patrons, and I said that S&P is likely to come back into these vector candle points. Happy days, they've done that. Now we need to wait and see what's going to happen. You see, the S&P finalized at the lows quite aggressively back up in this zone. Did a great job of coming back up. Does that mean it's all systems go to the upside? Not necessarily. Now we want to see proof of the move. We're now going to wait and see because this move has been quite a drastic drop to the downside for the S&P. And the word on the street is saying that people are talking about this could be the bottom, this could be the bottom. Listen, bottom fishing in the markets is not a sustainable way to stay in the markets, okay? You want to wait for confirmation because price can start coming up from here, ladies and gentlemen, and then it can hit the 50, come back down again. So what you're waiting for is you're waiting for price to break the 50, come back and test the 50 to only move away from it. You don't want to see price testing a moving average above it. You want to see it coming to test a moving average below it so that you can then anticipate that if it's going to hold that point, then it's going to continue higher. You don't want to be waiting for a test of the 50. Okay, start buying here and then wait for the test of the 50 EMA for price to only come back down again. You're going to be in a bit of a situation. And there are people out there that do that. There are people that will put their bags down and start catching moves from this point. They've seen success. Price has come to the 50. They think they're now in a bullish market and then bang, price comes all the way back down and recovers back to the point that they started from. And then they have the concern that price could actually go down lower. The problem that we've got across the board, ladies and gentlemen, is as long as the dollar index keeps on moving up, it's going to be an issue for us. We've got Euro USD, which is nearly close to parity on the dollar. That is crazy. Look at this. Look how close it is to parity, ladies and gentlemen. That is frightening. 20 years, man. That was the last time Euro USD was at parity. 20 years ago. Okay? That will be a problem for the euro. Now, given that the euro makes up 56 to 57% of the volume transacted on dollar, that's a problem for the euro. Great news for the dollar, bad news for Bitcoin. All right? So coming into the start of next week, ladies and gentlemen, we are going to wait and see if Bitcoin can sustain itself at this point. Yes, Bitcoin is in and around the lows of last year, but we still need to wait for confirmation. Okay, we have this vector candle here, and we also have this wick down here, which makes up a vector candle on the 1 hour time frame. That is a problem for me. I'd be more comfortable if Bitcoin can aggressively break from this zone and continue, and then I won't have to worry about this candlestick for a while. No different to the amount of time it took Bitcoin to come back towards these vector candles here, and of course, if I go back in the charts and pull up the 4 hour, you can see that green vector candle right there. Look how long it took it to get back to it. That happened in July. It recovered it back in January, nearly 7 months later. Okay? So, ladies and gentlemen, I hope that has made sense and it's helped you in some way to understand Bitcoin's movement. I'll be checking in with you all tomorrow, Sunday night, to bring in the levels and just to make sense of Bitcoin's play coming into the start of the week. If you are new to the channel, be sure to like and subscribe. But more importantly, we are coming towards the end of the month as well, ladies and gentlemen. So just make sure if you decide to join the Patreon, don't do it until the start of a new month because you'll be charged twice. All right? Just wait to the start of a new month. Okay? Mad love and respect to you all, guys. I will check in with you all tomorrow. Take care of yourselves, family. Peace.